Welcome, friends, once again to yet another episode of Market Wrap with Raja. And we can see that the cheerfulness which was there at the start of the week, as we had discussed last time, did come to a very rough ending on Friday. Well, the bulls were definitely in the thick of things, but what happened on Friday definitely poured some cold water because of some global overseas cues. Well, the markets are continuing to blow hot and cold, and our perception, our anticipation of the Nifty moving above 11,000 is facing a very tough and arduous task. So, under this atmosphere, how are we going to go about heading into the expiry for 2018? And is the Nifty going to wish us a happy new year ending, or we're going to enter into 2019 on a very somber note? Well, let's look at the charts and find out whether we are in such a stage or where are we in terms of our analysis forefront. That's what I have done for this week. I've taken a look at all the major indices and also done some other kind of studies which I will share with you. Let's move right in. If you can see on the daily charts, Nifty has once again tread back into the 200 DMA. As you can see here, the red line which is going across the chart is the 200 DMA, and the strong decline into 200 DMA is now bringing the Nifty at an inflection point. And to take our analysis further, I'll just rewind to the charts which I have been highlighting over the past few weeks. Before that, let me just go on to the quarterly chart. This time I've decided to take a little bit higher time frame. I've taken it for the quarter, and I can see that ever since the move began in 2009, it has steadily been making a higher lows, a higher low formation for more than 10 years. So, and now what has happened is it has been continuously moving in this channel. As you can see here, it has been continuously moving in the lower channel, and right now the prices in November tread into the median line, and it has formed a negative candlestick pattern which is called as the shooting star. Now again we are having a hanging man. So all this is indicating that the prices are not in great strength as of the moment, and a decline into the lower levels around the extreme lower levels is somewhere in the region of 9,800, 10,000, which we saw earlier, and that continues to be the worst case scenario. However, the momentum still continues to hold on to the overbought levels. So on the quarterly forefront, Nifty continues to hold on to some amount of bullishness. But yes, the negative candlestick patterns is what is causing some problems as of now. So again, coming back to our immediate scenario and what we are looking for the coming week, you can see that the gap area which was formed in October clearly spells large amount of weakness, and that is why you are seeing repeated attempt in December at the start of the month and also towards the end of the series is finding supply. So this region around the 11,000 mark is a continuous attraction of supply, and that is what happened. The prices were moving above the median line, and they did fairly well too. But then the supply has now broken the back of the bulls once again. Well, are they going to claim their territory in the next curtailed month is yet to watch out for. However, the momentum indicators are suggesting some more weakness, and in the region of 10,550 to 600 is where I expect some kind of bullishness to step back in again. So one should actually be going into the next week with a negative bias. That is what is my opinion. And to add to this fact is my analysis on the bank Nifty. If you recall, I have been mentioning that somewhere in the region of 26,800 to 820, a closure about that would definitely take the bank Nifty higher. And that is what happened in bank Nifty. The move above this, the last week's closing above this did augur well, and my view was for remaining bullish for most of this week, and it did materialize. And the move is now tread into the 78.6% Fibonacci retracement resistance. And at 27,500, well, the Nifty made a high of 27,425. So that's roughly just about shy of this resistance. And one could consider that probably now the Bank Nifty, though the momentum which is being seen here is definitely bullish, the overall sentiment does seem to be disturbed. So while Bank Nifty could play an act of the savior, we need to see how the next week could pan out, because the indices are definitely exhibiting a mixed trend. Now, the other index which we actively track, considering the move in INR, you can see here that the Nifty IT has been in a range, and it has been struggling to cross above the 50% retracement levels around 15,000 after the decline which we saw since September. This range bound action should continue to persist for the coming week, and one should refrain from entering into positional kind of play on the IT index, and one should be actually concentrating on the stocks where there is more bang for the buck. And the momentum indicators are clearly suggesting that the declines are very much in order. So one should actually be looking at component stocks for some shorting opportunity. So that's what we have in store on the indices, with the Bank Nifty continuing to hold a mild bullish flag for the coming week, while the Nifty is definitely in a spot of bother, and so also the Nifty IT. With indices in conflict and tending towards a bearish bias, one should enter into the next week with a negative frame of mind. So that's what we have for the coming week. And I'm sure that you've got some insights on how to analyze the markets in a detailed manner. And for more updates on what kind of stocks to pursue, do watch our YouTube video on the stocks analysis. And I'm sure that you'll be getting some more insights on what stock to trade and what not. Thank you so much. Thank you for watching.